Hey everybody! So we are on Tuesday, last day of the month. Tomorrow is the monthly open. Now we have the monthly close. Now, the most important thing for us to think about at the moment is how we believe the monthly candle is going to close. And we're sitting right on top of support, which is the monthly open. If you remember, we wanted that back test of the monthly open. We got that now. So the monthly candle, do we think it's going to close it? I think we're about where we are going to close. If today's candle closes a little bit more red in the next 10 hours, okay, even a little bit more green, whatever. But I don't think there's going to be an expansive move down or up. I think we're flat for today. All right, okay. Now, tomorrow is another story because the first day of the week, sorry, the first day of the month could be where you put in the high or the low very early. So we could get a quick little run of the lows and then a recovery, a back above the level, and then we get to go long. Okay. Now, if we look at the monthly candles, let's use a clean chart over here and go monthly. Monthly. What do we have there? Okay, so this is where it gets interesting because, like I said, before we brought this chart up, I said we're likely to see um, price close where we are, somewhere in 23.4, 23.3, which would give us what? What would that give us? It would give us a or an SFP, a swing failure pattern. And there is a stream we had a while ago where I can't remember, we got back in the range and the target was always up here. And then that was enough for us. Because all we do is we look for candle highs and lows, don't we? And we've taken out the range high. So I wonder if that does close as an SFP. Let's work with the assumption that it is going to close as an SFP. Where would the next targets be? Well, it'll be previous monthly high, which is the current monthly high, and the current monthly low. So I think more probable is going to the low. If this closes an SFP, I think it's more probable we trade towards 21,000. So what we'll do is we're going to mark out some levels with the assumption of the tomorrow's candle close. Okay. First, we're going to go over the trade that I'm in, and then we'll kind of come back to the macro. Now this is pushed up, but I think it's just just a little um, London session move up. I think we could get more of a fill here. The point is, I don't think we're going to go too far. Okay. Now our invalidation on everything is where our stop loss is. That would give us two reasons to be bullish. Okay. So you bring in you take the KSR over there, and you break. Well, firstly, you're looking at this area of price here, okay? And what this is currently accumulation of distribution. We have the failure pattern, okay? It's broke down, broke structure. As I said before we started the stream, I've got a few friends on Twitter that actually the breakout, they bought the retest and they're now trapped. And they've told me, they said, we're trapped. We need to get the fuck out of this position. So we need the market to move up. Now I'm thinking, is that a little bit of edge there? They're trapped. Maybe. I'm short. Only one of us can win. Um, Zero sum, isn't it? Doctor is absolutely fine with that, so I'm fine with it too. Now, if they get a break higher and they get out of their positions, even if it doesn't break that high, I would consider a break back above this level as bullish. And so I would, uh, if it doesn't just blast through, if it doesn't blast through and it does just push through and retest, I would close the position. Okay, the ultimate invalidation is there because that's where the market moved up, swept the stops, broke down, broke the structure. Now I'm expecting, or I'm hoping rather, I'm not expecting. I would like to see. I would like to see the full position fill off this level. Now, if I'm lucky enough, okay, I think the market might move up in the next few hours. Might move up and take out today's high, which is there. Okay, today's high is in. Oh, why is that not letting me have it? Oh, there we go. take out today's high, which is there. That would, because we have one, okay, and then we get the breaking structure, and then we look for double confirmation, don't we, on it for the continuation of the trend. We want to see stop runs in the direction of um, our position. And we had something similar here, and we've mentioned this many times before, but this was a good example because it was one where we won, took out the highs, pulled back, it then went flat. We then got a stop run to the upside. We then got another stop run to the upside. So just keep giving us these little confirmations of traders being taken out. Now we've got one here. Okay, now if we get a little run up here and it breaks down, okay, that will be good news. Very good news. That would sort of confirm that it would give us a little bit more higher probability that this was the high. And then tomorrow we hope for the super nuke, the turbo nuke, bang straight into there, which I still want to see this taken out because I want to see longs blown out. Okay, I think if you're in long, and I've been in long off these bottoms 100 times, and 50 times I've been taken out because you're too early. You jump in too early, you're praying this pumps from here, and you just get run over. And so I'm thinking I want to be hitting that low before more upside. Okay, so what I want to see, if you're not in a short, the level is there. If you want to take the short, great. If you want to wait for a lower time frame confirmation, which would come in the form of taking out today's high, wait for that to break, then get a break in structure, and then you could go for the scalp. You go, there's your risk, entry anywhere in here, and then you could just go for Monday's low. Okay, so there would be your scalp. So for us that are already ready or we're already in a position, we don't want to add. We just need to see a stop run of the highs or a breakdown from here. But those who want to take a scalp, break higher, break lower, entry, target Monday low. Okay, because we're within Monday's range. We've got Monday's high here, Monday low here. We'll bring that in now, and then we'll go on to the macro chart. Monday, 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 happy days. You remember that song in England? No, of course you don't. I don't think any of you are from England, are you? Anyone? Which ones are in here? I think Takeshi will remember it. Happy Days. Was that American? Monday, Tuesday, happy days. Cheers or something, isn't it? Wednesday, Thursday, happy days. Yeah, something like that, isn't it? From the 80s, that's exactly what it was. You're Takeshi, you're not 18. We're not talking about how many short positions you've got open on altcoins. So basically, right, what we have is Monday high, Monday low. Okay. Mid-range, look at that. Resistance, resistance. So a quick little, you now got two highs in there. One, two, and then a daily high, in fact. So if there's a lot of shorts in there today, they're too early. Bang, let's blow them out. Get back below, take your little scalp, short it into Monday low. Okay. I'll obviously be waiting with my take profits there. But if Jim Cramer keeps telling us he's bullish, sorry, he's bearish, then that happens, okay? And we all get nuked. Now, let's go to the macro with the assumption we close an SFP. So we have, what do we have, in fact? Let's bring in a key level here, which would be SR. There, okay? So there is a key support and resistance level. In this case, support. It's broke above, closed. Um, broke above, closed. And we have broke above closed. We haven't quite had a retest. It's a really clean level, resistance, retested. So we have anchor confirmation. Okay, we always want anchor confirmation because otherwise you've only had one test, right? That's given us confirmation market sold off from this level. Market broke above, closed above, hasn't retested it. Clear liquidity at the current monthly low and the monthly high. So if we close this as an SFP, swing fail, after taking out all the candle highs, including this one, then we're going to target previous monthly high or low, aren't we? So what we're going to do is we're going to label them so that we know what we're doing. Um, tell you what, I'm going to go for last week's high. Ooh, last week's high rather, and then I'm going to rename it last month's last month's high, last month's low. Sounds good to me. Ooh. So they're going to be the targets, okay, for next month. So as you can see, tight within that range. Now, what else do we want to bring in here? Well, I'm going to bring in what was this? This was January. Was this February? Why is that there again? Okay, that's January high. Excellent. Which has been a nice level. We actually took a trade off it. We took a trade off January high. And it won. January high. We're going to go bring the weekly open in, which would be there. Weekly open. And we're going to drop this. We're going to bring in previous weekly liquidity. So we have, I'm going to leave that last month's high because that's an equal high, but I'm going to label last week's low. So I still want to see this because of where we are in regards to that key area of liquidity, which is big low, excuse my language, a big low, okay? And the high is here of the previous week. Now we know below the mid-range, which would be there, then we should target this side. And we're below the weekly open as well. Now, although the market's moved up today, it might just be going for today's high, and then we get the super dunk at these lows and here. It makes a lot of sense to me that we're going lower, even if it's just to take out this low. Okay, because one of these is going, this one or this one. And I'm betting on this one for the moment. Now, I don't know if this low gets taken out, and I don't care at the moment. We'll deal with that if we get big candle closes below. But the target for this week is here. This is it. Okay. Is that all clear for us? So we just got a simple target for this week, and we're not asking for too much. So I'm just going to label that out now. But obviously, that could all change depending on if we break above levels. Then we'd have to obviously readjust. But for the moment, odds are in our favor of this low getting smacked. Okay, so that's where we are. And bring that in there. Bring that in there. Maybe I'll switch that one over to, rather take it to the right and then bring this there. Maybe take that to the right as well. So we've got the daily, we've got the weekly low, we've got the January high. We took a trade under here, didn't we? Bang, shorted. Now, what do we have? What do we have? H4. Swing fail. So this is where it gets interesting, because look what you've got. It's a very difficult one, right? You've got exactly the same pattern both sides. So a low was formed, we took it out, closed green. A high was formed, we took it out, didn't close red, but we did close bearish. Both these candles are H4 SFPs. Which one holds is the big question. I haven't seen it like this for a while, to be honest. This is like the exact opposite of each other. So one of them is getting taken out, isn't it? Because it has to, otherwise we go sideways forever. So which one's going to hold? Now, I don't really want to bid that, because the trade would be to bid this, wouldn't it? Stops out there, the structure's broken. It would be to bid that. With that, even with that key high, even with that SFP there. This is technically a high-low setup. I favour the downside, which would be here. We had a 6-day trend. You're on trend. You're below key levels. We had a key SR in there somewhere, which we haven't marked out, but we do have a key SR below, and we have big areas of liquidity below and last week's low, which we're in touching distance of. So I favour um, the short side, and that probably would still be a setup on the H2 maybe. Yeah, so I think if you, would it be H1 or H2? No, we'll go H2. So if basically, if you're taking a trade, a swing, at the moment, you want to use the whole candle. You really could take a setup off there. That would be a very valid setup. You look at it, you look to the downside, and you had, here was the low that created the high. Did it break structure? Yes. Candle closes below. Double check. Lines. High, low, break. Okay. So we've got the break in structure. We've got the high. We've got the week. We're below the weekly open. We've got that trap. We've got last week's low. So last week's low or last week's high gets taken, and I fancy this to dump off this level. So if you're not in a swing, there you are. Stop loss risk at the high. Target last week's low with the potential of just filling the gap down. If you remember, we went over on the last stream the liquidity gaps, the common gap from Paracurve. So that would probably come in somewhere. I mean, you'd probably get it. Yeah, it would be there. It's just such a clean little setup. So you got the lows taken out, you got the breaking structure. Something like this is a very nice trade. Just a simple short setup. Everything lines up for it. You're now getting stop runs in the direction of the trend, and we've got that thin move up, and we're looking for the grind all the way back down to the level, and this is where demand will be. So I think for us, shorts, and then we look for longs. Okay, demand will be here because this is where it accumulated. The market got sent higher. Now we look for the sell into there. So if you're not in a swing, that's the trade. I'll post that in the channel now. I posted it in Bitcoin charts. Okay. And you've got your scalp short if you wanted that. Now, do you have any other questions? We have a nice clean chart here now with all our levels on. We're ready to roll. Otherwise, I'm good. Because it's the end of the month, because it's the last day, I don't want to look at SPX and dollar because they might sort of confuse me a little bit. I'd rather we had a full set of monthly candle closes and we back on it tomorrow morning with the monthly opens. But right now, things are for bearish biased shorts. I think things are going well. I think this is how it should look. Okay. Thanks for joining. Bye bye.